What's up, everybody? Good morning. Welcome to the stream. Let's go, let's go, let's go. Let's get some hype. Ready to kill it today, everybody. You know it. The GDP numbers came out. Can you guys hear me? Things sound good? Sounded good in my testing on my speakers and mic and everything. Just double checking. Music good, sound good, got the chill going. All right, let's do this. All right, the initial jobless claims came in. Continued jobless claims. GDP quarter over quarter. This is good. Goods balance as well. Quarter one. 3 minutes till market open. Just a quick survey and inventory of these little piece of information we got. GDP growth is still positive quarter over quarter. That's all you really need to care about. That's the angle that supports a growing economy. You want to see your GDP change over the quarter. As long as that bar at the bottom, that bar graph is greater than 0, it just shows growth. Now growth is slowing a little bit, but that's just because it was rapidly speeding up early 2024 and the big old kind of tech boom we had. But anything above 0 is great. As long as it's above 0, it's good. Anything below 0 is a recession. It's one of the telltale signs of recession. The trade balance difference between the import-exported goods during the last month. Which is good. It can just show. It's like an inflationary kind of metric. Did I do quarter over quarter twice? I did open it twice. Okay. Initial jobless claims. Still flat over the last, couple quarters. Continuing jobless claims. Still flat, slightly angling up over the last 5 weeks, but still kind of flattish, which means there's, people are it's kind of stable where it is. Unemployed folks were going back to work, but basically that's kind of stabilized. So really kind of an equilibrium point at this moment. Which is good. Markets at all-time highs. People aren't getting laid off. It's a sign, and GDP is positive. It's a positive sign for the economy. Positive sign for the stock market. It's definitely good. Growth is here. We got it. We got some growth. Get the dynamics on the chart real quick. I get the DDs as well. S&P DD 5237.5. Upper 5302. 1 minute till we open. MHP 5250. Decent support overnight. MHP high SPY 5285, 5250 as well. It's here. 5285. All right, so we're kind of stuck between the two of them, between yellow lines. Pretty nice and clean setup here. Market's been trading down for the last maybe 3 days, off of the highs that we had. You know, post Nvidia earnings, market just kind of ripped and then sunk. Hit that like button, everybody. Friends, let's go. Give us some love. Don't mind. Out the door, resilience positive on the S&P, slightly negative at Qs, so we'll see. Okay, we're gapping down and trading down. Let's just make sure that resilience number is looking pretty interesting. So immediate gap down and sell off. So positive resilience is looking slightly good. I'm a little cautious on this guy right here. All right, barrel long up on minimum upside about 1.5 if it does move. Not the best setup in the world. Positive, positive. This looks decent. They are looking good. Okay, so this is long setups again. Bull zone support right here. On Nasdaq. So Nasdaq, there's a scoop up right here to 42.56. The S&P, there's a scoop up to fill the gap on positive res. There's really no irrational signs. The market is looking pretty solid here. I don't hate it. All right. All right. Make some drawing stuff up here. Looking good for upsides. I took some small entry longs here. Where's my pencil tool? Signs are good. At least longing to gap fill, or at least top of bear zone. Those are both good setups for me. Friends, hit that like button. You know the drill. You know how it goes. Scroll down and give us some love. Or give us some like. Or give us some aggressive hatred. Just click it as hard as you can if you hate us. Okay. Okay, things are looking decent here. Signs aren't too terribly bad. Bull zone support. BSU is one of my favorite longs. The bull's side support on BSU is always super strong. The problem is that the middle of it is between hedge pusher and bull zone, so the support is like literally right there. I mean, sorry, the profit target. So this white dashed line is a halfway point between these two areas. And Nasdaq is, wow, Nasdaq's getting kind of nuked right out the door. So keep an eye on this one. Fingers crossed. S&P trying to break hedge pusher as well. Yeah, keep an eye on this one. QQQ is smashing through support really quick. And hedge pusher break on the S&P. Wow, that was a quick turnaround. Didn't expect that. It's still positive. While Nasdaq looking bad. S&P still looks good from here. I still like it. I don't hate it. I do not hate it at all. This is the rarer case with rise greater than 0 for this to pull back. So the S&P is just selling off quicker than the stocks. Keep an eye out right here. As unexpected. So about it's a smaller probability to break right out the door with everything looking solid. Nasdaq is the one that sold really quick. So hang in there. Come on, baby. Hang in there. This is the rarer thing. There's some sharp Nasdaq moving. Come on, hang in there, baby. Hang in there. Totally unfortunate on this one. Didn't expect it to do that. It's gonna probably test here in the middle. Let's see what happens when it hits there and tries to test. I still don't think it's a bad setup. I still think it's good. While it is trying to overshoot about 3 points under, all the data still suggests it wants to go up. So we'll see. We will see. All right, let's look for the calendar for things going on today. Come on, hang in there, baby. You know it. Anything else going on I need to look at? Oh yeah, today's Thursday and there's a holiday, so crude oil's moved a day ahead. Here's the test at hedge pressure. Let's see, Res is still doing decent. Market was trying to sell off, but I don't think it's gonna happen. I think we're probably okay, but let me double check VIX. Come on, man. Hang in there. It's a bull setup on the VIX. It's the volatility. Creating a little bit of turbulence. Any volatile hedging or any hedging on VIX itself that's bullish can be volatile. So this is scary for the bear side. So be very careful. Be very careful. If this as volatility is trying to collapse, this is increasing. So it's getting wider on the selling. So it could turn against us, but let's be very careful. What you want to see is VIX below here. You want to see VIX break hedge pressure to the downside, and that collapses this, and we just shoot straight up. MHP on a video broken. Let's take a look at the, let's go to the scanner. We're going to search for some stocks. Let's just look for MHP breakdown. Just double check to see anything that's happening. More stocks there. Below MHP, let's double check there. Volume. NVIDIA, yeah. Come on, market. Does MHP break up? There you go. NVIDIA toppling and then recovering. That's creating the turbulence we see, yeah. So just one stock trying to jolt the whole market. So the support on Nasdaq has been broken right here where I drew that. Let me clean it up a little bit. This was the problem. Yeah, way to isolate that. So this right here, shot up, shot down, shot back up. So Nvidia being the sole catalyst. You see how the market was expected to hold these areas right here. This was expected to hold. This was expected to hold. And then Nvidia, just one stock selling with that much market cap, created that unusual turbulence. There's enough volatility to allow it to happen. So we're good. I think we're back in the money here. My long's hanging in there. I think I'm good. Resilience is now negative though, so my target is now probably just a scalp. The halfway point. Careful here. This is still at resistance. This is trying to sell off. We're outside the box. So in the next minute or two, if this doesn't get a bump, I'm probably out. If it starts playing at hedge pressure a second time, I'm done. I like it. Friends, smash that like button if you don't mind. Give us some love here. Go down to the bottom right, click the button. Don't forget to check out the Rocket Security and get a 1-month trial. $35 to check out the platform for everything goes up and the marketplace comes out. You can hang out with us. Liquidity maps, monthly maps, resilience, all come as part of the package. Eventually will be all sold separately on the marketplace, which just got a major overhaul release today. Marketplace is live and kicking. Kind of like soft launching it. A lot of our vendors are using it. Their links are already active on their page, which is amazing to see such a great response from all of our friends out there. Everyone we've talked to, 100% success rate, has signed up. Every vendor we've sat out at the meeting with has signed up. Nobody has said, I don't think this is for me. That's how big what we made is. Okay, careful here. So if you know anybody that makes anything or sells anything or has anything in the trading world, send them our way. QQQ is experiencing a little bit of liquidation on monthly maps. The bull side is selling and the bear side is shorting. So bear side liquidation, bull side liquidation. When they're both sloping up like this in the short term, this is a tumultuous week for Qs. So SPY really quick. That structure is starting to change a little bit, getting a little wavy. It's no longer super solid. Thank you, John. Sidelines on this one, hard pass on the market. I thought you said hard pass on the marketplace. I was like, John, my bro. Sidelines on this market. It's not the best. This is not as strong as I want it to be. All right, here we go. Bull side liquidation on SPY. Bear side increasing on SPY as well. This isn't the strongest weekly setup either. So odds are higher that we can continue the selling, but I think the market's wanting to be bullish enough, especially with the data that we have. It's not trying to die. And as long as we're keeping NVIDIA front and center on the screen, as long as NVIDIA holds monthly hedge pressure, this will try to make a run for it. But this resilience number being negative and getting less negative is an early warning sign that's telling me I probably should bail on my longs. So I'm going to be a wuss today and bail on the longs. I'm out. So I'm out unless this starts to recover, then I'm back in. I'm back in. It's a clear 10 points. So my finger's on the button to relong. I close my positions. I'm out. This is too rich for my blood. It's not getting any kind of on this. Monthly maps looking kind of as well. Ew. NVIDIA trying to make a run for it. Again, I know I'm probably being a wuss. If anything happens, it's a great, big, huge green candle comes out of nowhere. A commit to trade would be me setting like a 10-point stop. But because it's about, you know, from here to my now new target here. It's my new target. It's only about 8 points away. Is it worth fighting for on 8 points. We'll see. So as an opening gap today and yesterday not filled. Oh yeah, that is very true as well. We should mark our gaps on SPY. I've been kind of lazy lately on doing that in the platform, so let's do that for you guys. Mark up a gap. Go ahead and go to the 1 hour chart in SPY. Always mark your gaps. One of the most important things you can do as a trader. Let's find them. Oh, let me go to the hourly chart first. Daily chart. Easiest ways to go and do this is to go to a daily chart and just start marking where your gaps are. The tops are green candles, bottoms are red candles. Yep, I'm out. I'm out of all my trades. So quickly running away. I lost $66. That's it. But I'm bailed. It's looking resilience is that telltale sign to get out of the way. I'm not shorting it either, but I'm out. It's easy peasy. Not every good setup is good, but whenever you see something that looks bad, get out when you can. Not have to take a loss, no drawdown, no blowups. There's the gaps. Now again, what you do is you mark the tops and bottoms of candles. So here's a trick, a lesson on gaps, right? The easiest way to see it's on a daily chart. If you don't mark them every day as the good days go by, the easiest way to see it is a daily chart. So you can eyeball it. You're looking for where the close is the candle. So the way that they draw on most trading platforms, including ours, is the top of the green candle is the close and the bottom is the open, and the reverse for red candles. The top is the open, bottom is the close. So you look for, the way we do it is different than what you learned in the textbook. So the way that we do it is you go and you look for any price at which the wick or body of the candle has, in the future after you draw it, has not been touched. An example is here we closed this day and this day we opened here. There's clearly a gap. It's visible on the chart. Easy to see that. It's daily candles don't show the after hours data. Daily candles are locked into just market hours. Okay. From here, I just look to the right. Oh, there's nothing ever touching this, so it's still open. So forget about like partial fills and all that. We deal with half gap in different ways. So like what they call like a partial gap fill or total gap fill is a completely useless thing. There's a gap fill and a gap fill only. A partial gap fill is where the textbook, like for example, shows, I think it's like a wick or something like that. Ignore all of those things. I'm gonna find you guys something. Actually, yeah. So let me start over. So partial gap fill. An example on this one would be that like you open right here. You keep trading higher. You open inside of the range. But don't touch the close. Forget that you ever were taught that. These things don't matter. It's a useless thing. What matters is the gap fill, etc. Itself. That's it. So all you care about is, was this line ever touched? That's where the opening and closing happens. The opening and closing is the large volume at the start of a day and the end of a day. It looks like a J. So the high volume buffers are at the open and close price. Those are the only important things. So if you open anywhere above here, gap is still there and it's a target on the way down. So it's easy to see that this one, there's a gap up. This one, there's a gap up. This one, there was a gap up and then eventually it filled. So you can look at these and eyeball them very quickly. There are no more on the open on the long side. And then on the downside, we'll mark one here on the reds. So on the reds, clearly there's a gap down right there. And that's it. So on the way down, the gap gets filled right there. let's go back and just go back and remark some of these old ones. Here's an example. This is an old market gap up that got filled, and we delete them once they're filled. Now, what after I do is I go through and mark them on daily charts, right? But then I go through and I double check by going into like an hourly chart or a 5-minute chart or something, making sure. Now, resilience is getting worse, so I'm assuming the market's melting right now. That's that bullish volatility, so we see that. And keep an eye on NVIDIA as well to make sure that you're not getting blindsided over there. So mark them where you see them visually and then go back and double check them by zooming in. Make sure that, don't just trust a visual inspection of the candles. Make sure you go in there and physically find out, okay. Because my little scaling might have you draw it in a certain place, but go back on the actual chart, 5-minute chart, and make sure that your line that you drew lines up exactly at 15 o'clock. Just here. Right, make sure that we mark it at the right spot. So we close right there. Okay, good. So I go back and I correct all the ones just to make sure that they were there. So when I generically mark them, I'm going to come here and actually mark them. I like to move the line right over here. So remember, markets like this, greater bull market is still present. I still don't short. I sit out and let it fall. You guys see how quickly I am able to bail from a trade I don't like. And pre-market doesn't count. Pre-market tapping at all does not count. So I come here and I look and I say, well, okay, that doesn't count. We opened right here. Okay. So now I got some gaps on my screen, right? They're still open. And then we're going to utilize these in our trading. As I zoom out, you'll see that you do have some targets to play with. So anytime you have trading instruments that are in the equities markets, trading those guys, you need to be aware of gaps on any particular thing because they can be reversal points. So on a break of hedge pressure, a gap fill is in accord. So once I bail my long trade, again, I'm kind of saying, screw this one. Any downside if there's a break. If that is the target if. Now, I don't bet on bear side in a greater bull market. DD is still bullish enough, greater than half. Monthly map wasn't so bullish though. And we are trading above monthly hedge pressure, so it's like not all the signs are there as well. But for me to be bearish, looking for bear setups, I want it to be a bear market. I want to put all this odds in my favor. This is just a down day in a bull market, okay, but volatility now starting to collapse. This can tighten up this market and it can start to look better. I'm not hating it. I'm still eyeballing it. With resilience being negative, I'm still not jumping in and taking anything. This is showing that the stocks themselves are still selling off below their half gap faster than the stocks that are crossing above it. So inside of this box, majority of the stocks are on this side of the box, weighted by market cap, rather than this side of the box. So if resilience is negative, it means most of the stocks are doing this number right here. So the S&P typically doesn't rally if the stocks are not doing the same. So that's a good indicator. The S&P sometimes can trade on its own, but typically it's tethered to the index it follows. So I don't put a lot of weight and faith into the index moving first. But with volatility kind of collapsing down, that's a good sign that we're not going to collapse either. So if down to there, if up to there. These are the scalps for the day. The hedge pressure pivot is the pivot. Oops, I don't mean to do that. Res less than 0, resistance there. Res greater than 0. There. These are my conditions for a trade. This being negative, though, the cheat sheet kind of has me a little concerned. So I'm not pushing too hard on this. Close everything out. You need me an email regarding billing? Okay, I'll check it. Is it your data feeds? If it's your data feeds, we'll get you canceled. We're trying to get everything rolled over to the marketplace website, so yeah, if you have to cut your data feeds, just send me an email for now and just tell me cancel my data feeds and we'll do it. I figured that's what it was. Yeah, there's technically nowhere for you to cancel them yet. It's on the marketplace, but we haven't rolled your account over to it yet. Like the now today, they had the biggest release that we've had in months on the marketplace. Huge release with so many new features and things. It's a big push. That's why you kind of see me being a little busy as of lately. This is a huge push. So the very next step right now is to roll people into the marketplace. So essentially it's a new website, new experience. All of your stuff is going to go there. And you'll be able to just cancel it one click. I'll show it off to you guys. I'll give you guys a little teaser. Let me log in. Like a little bit of a... Keep an eye on resilience. It's trying to fight itself now with volatility on the sell-off side. Volatility losing hedge pressure. This could be good for the market. So I actually like it again. There you go. Positive, fingers crossed. I'm going to see these numbers go back to being positive. Hang in there. Hang in there. Get back in on the long. Yeah, I'll take a stab at the long again. Okay. We're back. I'm back long. 1, 2 attempts and a third attempt at hedge to break. I'm back to long. If this breaks my heart a second time, I'm just going to cry. All right. Let's see. Rest positive. You got along. Yeah, John's seeing it. Might as well. I was only down $60 the last time, and if it does collapse on me, and breaks my heart, I'm out quickly. Like I said, I'm playing with $200 through $400 of range here. Nothing to cry about. Home sales in 5 minutes. Home sales in 2 minutes. Oh, there is a possible event, so let me double check this. All right, so marketplace, right? User has a dashboard. All my applications, so I can launch my platform from here. All the communities I'm part of, I can launch my Discord community from here. Purchases, everything I bought can be shown right here. My courses will be here as well. So whenever we do courses, which is the thing that they're working on now, all your courses and videos sold by different vendors will be there. A ton of vendors already signed up. It's just clean as shit, dude. I love this design. I'm not gonna lie. I didn't brag too much about the platform when it came out, even though the platform is amazing. I like to be humble, but I'm extremely this website is gorgeous. It makes the other websites have a really good new entry to the market. Pay attention to. I think it's very pretty, very well done. There's Whale Stream. There's simpler trading. There's Jake is here. His beautiful, beautiful face. Jake's a good buddy. Gamma Edge. Let's go Hedge, baby. No, come on. Don't fight us. Okay, the home sales, that's it. That's what it is. Fingers crossed. Let's go, baby. Hang in there. Keep an eye on res. Just watch for any sign of anything. Market's looking for a catalyst. So one of the neat things here is that you'll be able to people can sell discords, people can bundle their stuff with other vendors. So like him, an example is that this is something that we did that nobody really does, I guess, in marketplaces, is that I created a product called Pro Plus. You guys all have it or whatever. He created a product called Discord. On the back end, him and I can team up and sell our products together at a discount. It's called a bundle. So this is a bundle. We're testing out the feature where he's bundled his stuff with Rocket Scooter. So here, like if you go to buy it, it's our platform plus his, and then we set a discount, and then that's it. Which the discount is missing the negative sign. Make sure I grab that. Little notes on that. But so you and your friends that sell something can team up and now have two products with a discount. And then you the back end splits all the proceeds the correct way. So you can see, we're going to start to see a couple, collabs and stuff between vendors. You meet somebody and you're like, hey, our products synergize very well together. Like I sell a platform and you sell training on gamma exposure. Why don't, your thing's 100, mine's 100. Why don't we team up and offer people a 20% discount if they buy both? Sure, I got that here. You're breaking my heart again. Oh, screw this. This shop fest off the event. Took a spot on the event. Yeah, it's done. Let me let it. That res jumped negative again. Why does market hate us? Nvidia just dropped below MHP. Let's keep an eye on Nvidia. If Nvidia starts selling below its opening price, I'm gonna call it. What a seesaw, right? Oh, wait, where was that? Oh, I was like, I drew that on my screen, not on the picture. I was like, okay, I was like, why did not show up in my screenshot? It's starting to look clean. I cleaned this up a little bit too, but that's the original display. The more I think about it, I don't like some of the features on here. So we're gonna change this. So ideally, the idea is that you buy a product that comes with two products in one, and the subscription's maintained in one spot. Pretty neat, right? This example is you can buy our Pro Plus platform, you get his Discord along with it. We apply a discount, it's all automated, and then that's it. You can make affiliates at our marketplace on the fly, set up your affiliate immediately, and people can start selling and doing your product and stuff. This is what we've been building secretly since, 2020. We started this company, Rocket Scooter, with this end goal in mind. We didn't just start out building a platform. We were just quiet about our full ambitions. Having liquidity maps, having our indicators and tools and things, as you guys have known since 2020. A 4-year vision coming to fruition within a week of a public launch is kind of where we are now. So it's the next notch on my belt in the development world. I'm really excited, and we thank you guys and girls for all your support. We love you so much. I love you more than anybody. This is going to be something very cool for the trading world. Obviously, having a lot of ideas that nobody's thought of for marketplaces, especially for the safety of the consumer. There's a lot of scams out there, a lot of schemes out there, a lot of people out there. Supposed multi-millionaire traders talking about how much they make and paper trading in front of your face, right? With, losing millions of dollars instead of making millions of dollars and convincing you otherwise. And where do you go and alert people of your experience? Well, there's really nowhere to go other than social media. People are very good at bullying folks on social media and silencing the truth and yada, yada. Well, we have a review feature, and if a customer buys a product, within a certain amount of time, they'll be able to leave a review, an honest review of the product. That review will stay there over my dead body. Vendors be emailing me, hey, can you get this bad review taken down? I can tell them it's going to stay there forever, right? Things like that are very important. The integrity of the marketplace is based on, the net sum of all participating folks. It's not going to be one of those. A lot of people try to create like collaborative environments, but then they let their friends cheat the system or whatever. It'd be an honest place. If you buy something and like this guy was paper trading, right? It was kind of fishy or kind of whatever. Leave the honest review. And these are things that we want. We want to make sure that that's there, There's a lot of people go out there and pay their friends to leave them reviews on different websites. Leave reviews on different review sites. There's tons of them out there. Like, you can review your business and whatever, and then you pay someone, get hundreds of reviews that are positive. Amazon people do that. Yelp people do that. You're not gonna be able to do that here. You have to have bought the product. You had to have stayed for at least a month cycle term, and then you can write your review after that. One review, one account, and that's it. So it'll be an honest repository of customer experiences. So you'll be able to read what people say and do your due diligence. Another thing is that we don't allow abrasive or aggressive marketing. We don't allow you to make performance claims in any of your posts. Example is you can't show pictures of trading gains to sell your product. You can't show numbers that show profit or numbers that show account sizes. You can't show pictures of a Porsche. You can't show pictures of a house. A lot of trading vendors convince you to buy their products based on the impression of their wealth. But as we understand as traders, wealth doesn't mean squat. Just because Michael Jordan has a ton of money doesn't mean he's a great teacher, offers me anything good. Maybe he was good, but it doesn't mean that he's good as an educator or selling product they need. So to me, it's a wealth is 0% sign of someone's success in trading, education, or offering something you need. It's lining up exactly what it is they do honestly with what it is you're looking to buy honestly. And there's just honesty across the board. Marketing gurus, not training gurus, exactly. So there's going to be like, social media is a great place for people to go out there and say whatever they want. The invention of trader funding programs, fuck this market, dude. I'm tired of it. Stop moving around. Trader funding programs have made it easy for your average run-of-the-mill influencer to now paper trade in front of your face. Back in the day, if you were a streamer and you paper traded whatsoever and you didn't say, because I'm one of the OG streamers when it comes to streaming. I've been on YouTube since 2016, but this is when there were only like maybe 2 or 3 traders on YouTube at the time. Ross Cameron was one of them. I was one of them. Not a lot of people. This is when streaming was just starting to get big in general. Streaming was not even that big of a thing. It was just starting to grow. Like streaming of gaming and Twitch was starting to grow back then. And if you were paper trading at all, passing it as a real trade, the public would crucify you. It was seen as the lowest of the low. You are not real. People like being called paper trader was like McCarthyism, people being called communists in the 50s. Okay, you call someone a paper trader, it started a war back in the day. All right, I'm done. I'm out. I'm closing it. I'm down $600 on that one. So I'm closing my attempt. I don't know why. I just don't like that it's failing again. So I turned my like $60 into a 600 loss. I took it pretty heavy on the break, but I'm a bail. Better safe than sorry. We're getting a little irrational behavior here. And I'm just rather going to be on the sidelines. So anyways, trader funding programs, which I love, nothing against them, but the fact that they're here and here to stay, then your average run-of-the-mill influencer, all they do is paper trade. And now it's become widely acceptable for people to paper trade, which is what all trader funding programs are actually just paper trading. You get paid in paper account, which is not bad. It's what it is. But now it's easy for a new trader to not know any better, to stumble in and see somebody paper trading, claiming to make millions of dollars or hundreds of thousands of dollars just paper trading. And you don't know up from down anymore in this industry because now you can just latch on and watch somebody that's paper trading, taking no risk, taking no real thing. And then you're going to start learning from that person as they're not disclosing, hey, this is a paper trading thing, and the title of their videos or the title of their posts or whatever. I've seen so many charts flown around here. And then Tradeovate, of all companies, is the company that made the ability for everyone to do that. Thank you, Tradeovate. I love you, Tradeovate. You're my favorite brokers out there and platforms. However, you've created a monster. It needs to be defeated. Is that people are showing performance curves from a platform that have no designation look to if you're real or fake. Now, Sosnoff, when he made Thinkorswim, made the platform look different. And the platform has 2 different modes. If you're paper trading, it's yellow. If you're real trading, it's green. Real traded instruments like SPY will have a 24 if it's traded 24 hours. Paper trading instruments don't. Things like that, you can tell the difference. But these days, there's so many performance curves in paper trading. So how would you know? Anyways, the point is that on the marketplace, you'll be able to leave a review and say, you know, I bought this person's thing. Turns out they were just paper trading, and that's it. And so people need to know what's real and what's not because of the advent of these products, and make it hard for you as a customer to find what you're looking for. What if you just want to pass a trader funding eval and you want to trade alongside somebody that's doing the same? Then you'll see that there. People will say this is what this is. If you want to say, I want to trade with a real trader trading real money, the review should say that. I watched this person and they trade a live account, a real account, and then okay. There's really no place now for you to differentiate and see all of that. It's become acceptable for people to paper trade. And your coaches are now paper traders. Most all of them in influencing world are. And it's not a bad thing. It's not a terrible thing at all. It's just hard for you as a customer to know that or see that when you're looking to buy. And so the part of a marketplace is to give the transparency of what is in the midst of all the noise. And so you love Sosnoff the goat. Hell yeah. Smart dude. Very smart dude. And so you know what I mean? Like, so because of, and this is a criticism I do have, because of that invention, so many people now exuberantly exaggerate their performance because it's not even really regulated, and you can just, technically you're supposed to present if you make a claim of a trading gain and it is wrong just one time, all it takes is 4 or 5 people to report you to the regulatory authorities to be audited. It doesn't take long at all, especially when you know people over there. You make a phone call, it gets expedited. Okay. So it doesn't take long at all, but these days people just, you're getting paid wages to paper trade. So technically you're getting paid. So technically it's a gain. So technically you're taking 0 risk trades for gains, and then you can publish the amount. And you don't have to disclose that it's not real, because it's kind of real because you're getting paid. So what that did is allows traders to trade with no risk, relatively no risk, and take larger leaps than they normally would, present the results if they win, blow up and start over the next day if they lose, and disclose none of that to the person. And it just looks on paper like they're raking in hundreds of thousands of dollars a day when they're raking in 0. But because the system allows people to do that, it's a weird gray area where the truth is hidden. So the idea of a marketplace is we have now the burden of making sure that the consumer is alerted to what something really is. So we don't allow people to post gains. That's the whole reason I'm talking about this. You're not allowed to post any trading gains. We review everything that's posted or presented because it's easy to mislead this day and age. So you must sell your product for what is face value. We're trying to innovate the space here. If it's a trade room, talk about it is, what you do, what you sell, what you teach, things like that. So hopefully you guys like that we're taking a stance of consumer protection here. And every vendor we've told, especially if you look on our marketplace right now, the vendors we have are like, we have some huge names there already, right? They all love that idea. They're all serious. They're all serious about the business. They all teach something great or sell something great. And they love the idea that there's a fair and transparent place to market their products where they're not, because on social media, you know, the good stuff tends to be quietened down by the loud stuff, which is typically just hogwash. So in a place like Marketplace, it just, you state what is, like with science and math. This is what we sell. This is what we teach. This is what we do. Check it out. And that creates a fairness for the consumer to where you don't feel like you're just digging through a sea of well-constructed ads. And I think that to me, that's very important when shopping, because when I was buying stuff back in the day, you know, I've been trading, almost 15 years now. When I got started, there wasn't a place to buy stuff. There's a couple of places you could buy indicators. People were making. NinjaTrader is one of the first ecosystems out there, and people started selling tools, but it was like the Wild West. You never knew if the bottle of liquor you're buying was going to make you go blind the next day. I mean, like, nobody regulated that stuff, and it's kind of like this open world kind of thing. So now we have the burden. There's other marketplaces out there, but current ones out there know zero about trading and do absolutely nothing like this. And so it's still missing, and this is where the burden falls on us. So we'll be kind of like the sheriff, I guess, when it comes to fairness of presenting financial products and digital financial products and services to the marketplace of consumers. There you go. Automated red lines. And as you guys are like, I don't give a shit about this. Where's the red lines? Which is what we're here for. That is the next platform push, is to wrap up the future stuff. Red lines and yellow lines are the next push. The problem is it's a very hard problem to solve, and I haven't created a solution yet. To automate that. I have a couple of mathematical solutions that work very well, but I personally believe they can be improved upon. It's not easy as you think. It's a technique that has a few things you look for. A robot has a hard time catching all of them. So the idea is the hope is to use a little bit of AI and pattern recognition features to enhance the math model I made. this crazy market. So, anywho, S&P trading lower to fill the gap. VIX trying to spike higher, but like cleaning up. One final time, is this, are the market crashing or market stabilizing? Its resilience is back up again. I don't know what I want to do here. Volatility is dying the last time. Jeez. How's Nasdaq doing? Our third attempt would be strange, but we shall see. Red lines are an interesting feature. Like, imagine the market's trading and then the market dips, right, and creates a red line. We teach you what to look for. And the red line, what you're actually looking for, is on a tick chart. For that mode of impact, you're looking for the market to push to a new range. You're looking for volatility to expand, which is that, right? The V's get bigger and then get smaller. It's going to be the expansion, contraction, volatility. This little point here sets the anchor point of the impact. So from here to here, and then the midpoint is the red line. Then that sets something called an anchor point, and then for the rest of the day in the session, you create a secondary one. And these two spots are what you're looking for to trade. I'll brag about the original geometric solution I built. Is at any given time, anytime you find a high, you create a point. And again, this is going to show you how good, how mathematical my brain is and how nerdy I am. Okay, I can see patterns. I think in patterns, whatever. If I want to find these points geometrically, there's a quick and dirty way to do it. And what you do is you find a high of the day or the low of the day, and you repeat the same process. You start here, and then you draw a horizontal line. Then you pretend that this is on a hinge, and then you swing this line lower. You just let it drop, and it will fall until it lands on something. You'll land right there. Okay. So imagine this is the high of the day, and the market starts selling. I take a horizontal line till the end of the session. then I swing it down, and then I create a triangle. Okay. So with the triangle, you know, you can create some effects of that. You have angles and all that stuff. And from here, where it intersects, which would be there, you repeat the same process. And what happens is you segment off different pieces to analyze. And from here, you can do different things inside of this triangle. If this is a segment, you repeat the process. By like going through all the method, but essentially, if this is where, let's delete all this, let me easier to read. And then say like price did this. This is a cool, and what it does is it helps you find things a little bit better. Right, so say it bumped right there, and market did this. Okay. And close right there. You repeat. This helps you find again. I'm glad I got out of the trade when I did. So you hit there, and that's good. So now let me delete this. And so the geometric solution and what you're saying will help the robot find. So if this is where it intersected, you're gonna repeat the same process, draw a hinge, let it fall, and then where it falls, blocks off another section. Inside of here, so you have two different sections to analyze. Inside of here, you look for periods where the market has this, in a kind of like a rolling average, has an increase in the maximum high and low over a period of time. Like the difference between the high and low. And you'll find these little V's right here, which helps you. I'm like skipping all the method, but I'm sorry, the logic, but I'm giving you the method. So essentially, it's like once you've blocked off the sections, then inside of here, you look for periods where you have like a subsequent number of red and green candles on a tick chart. Then you can measure the high and low. And if the distance between the high and the low is bigger over the next segment, so the segments are like this, if the market's moving around like this, segment, 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 you look for a large green segment between two red ones, or a large red one between two green ones, and then that kind of hones in on certain areas as well. And then now if you like, okay, there's an area where it starts zigzagging around a lot, so let's look through here. Then it looks backwards and looks forwards, and it tries to isolate that. And then from there, it tries to isolate what's the point with the biggest volatility. And so now you have anchor point. So this technique helps you find the anchor points more often than it doesn't. And then this technique helps you find the low. And so it's kind of a geometrical thing. And then it's programmed with our rules of what you look for red lines. It's kind of neat little. So the idea is that you can't just have the computer look at everything, right? You have to segment. Anytime you're writing some kind of artificially like you can't just have something analyze all points and all solutions. You have to give like the robot pieces and say, look inside of here for these conditions, and then now look inside of here. So that trick, you can't just have the robot always looking for things. It's gonna be drawing red lines everywhere, right? You have to find larger segments of a move. The market's doing this all day. Then the robot's going to be like drawing red lines live all day long through all of these little things. So in reality, it's like, how do you really do that? So this technique that I just showed is not for live red line updates. This technique is for historic ones, and the live red line update is even different. So live, it's like, okay, that's maybe a red line. Okay, it corrected itself. Okay, maybe that's one. Okay, no, it corrected itself. What's the condition, right, that creates it, and how far does it have to go? There really isn't a condition, right? As we've taught in the technique, it's easier to go back in the middle of a day. It's easier to go back in hindsight and look at the chart and do it. When it's live, it's a little bit more difficult to isolate. Like, oh, right now, this is technically creating a red line, maybe. Oh, nope, it fixed. So it would be like drawing them and undrawing them all day. So you have to create a solution that's not doing that. FYI. The greater solution of like fractals example. Kind of help, like fractal mathematics. So you start that horizontal line, you drop it, and it creates a line like this. Create a hinge there, then you create an angled line, and you drop it, creates a line there, etc. You've blocked off areas of analysis for the chart to examine. And then we use our rules inside of there. And it's really good. And this technique gets about 90% or so of them. So it says this is area of interest 1, area of interest 2, etc. Then real time, it does create a lot of small red lines and undoes them. So we had to create another solution for that. And that's really the kind of the part I haven't solved yet. Like when you wake up today, I can draw the red lines of a previous day easily and then log them. So if you like that kind of greater macro that divides the data into pieces for the bot to analyze, that part is good. It's actually really good at it in real time and needs a little work. So I haven't really necessarily solved the problem yet. Right. So imagine that like this candle right here, the market just started selling. It's already trying to draw a red line and the red line's already there. Like I'm following with my mouse. You see that? Like, oh, there's red line. Okay. There's an impact right here maybe. And then like, where is the impact, right? It's still trying to draw in real time. It'd just be weird to see a line drawing in real time. But if you have a catalyst that suddenly drops and then holds, you'd want to see that line show within a couple of minutes. So the problem is, how do you show it in real time? And that's why I can't just like tell the guys to make it. All right, anyways, that's it for the morning. $640 loss, no big. But hey, definitely worth it. You can't win them all. And then call it a day, get in, get out. I'm safely on the sidelines. Resilience never gave me the love I wanted. I gave it a second attempt here when it started to fall. I got out of the way here. It could have been a lot worse. 10 more points, and then I knew not to do that. So pretty good. On the account size, you know, that's $600 is small. Not a big deal. Okay, we'll see you later. Love you guys. Make sure you check out the Rocket Scooter Marketplace whenever it launches. We'll let you guys know to how to make your accounts and everything, how to get your accounts over there. We're going to move them for you and how to log in, all that stuff. We'll get that to you ASAP. Until the meantime, if you want to check out the 1 month extended trial, we still have that going on. You go to the rocketscooter.com website, check it out, top right, click the button. You can play at the platform, sign up for your data feeds and everything. And that's it. And if you're in the platform, you're ready to unlock the potential of the marketplace, because that will roll over to there, and then you'll be able to buy additional tools and play with it. And of course, when Rocket Script is launched to the public this next month, you'll be able to code your own indicators on the platform and have a good time doing that. And it's something we've all wanted for the longest time. Give it a year to make my own coding language, but it's good to go. And we're already creating indicators and trading platforms for people using it. So fun times. We love you. Thanks for tuning in. We'll see y'all later.